Hello and welcome. You're with us here in Business Today. I'm Aabha Bakaya. Let's take a look at the overnight action as we count down to market opening, or we're actually just going to have the bell ringing any minute now. It has been quiet on Wall Street overnight. Asia also weak ahead of waiting some key data from China. Markets this morning opening just a touch lower there, 100 points almost. 25,927 is what we're looking at on the Nifty on your screens right now. Let's take a look at some of the gainers and losers as well and see where we're at. We've also got some big breaking news with the rupee opening at a record low this morning. Remember, we'd already seen that slip past 990 and now it's at 90.82 against the US dollar. Increasing pressure also on the back of no clear sign of a deal when it comes to what's happening with the US and India on the trade front. Rupee continuing to extend that depreciation right now, and we will of course take a look at those exporters the minute we start to kick off our those gainers on our screen. So Rupee at a record low, that's the big news this morning, 90.82, and continuing to see weakness all around. The Nifty 50, 0.4% lower, 25,928 is where we're at. And the Nifty Bank also opening weak today. That's what we're looking at right now. In terms of the index, Bharti Airtel seeing about a gains of about 1%. We've got IndusInd, Apollo, some of the other names there. And let's take a look at some of the newsmakers. And remember, insurance will be in focus today. On the downside, we've got Zomato, Axis, HCL Tech. Zomato's actually down 2.5%. So that's a bit of a steep cut coming in. Axis down 1.5% as well. Let me see if Shell is with us. Shell, good morning. What's your take on the market setup so far and how we've kicked off this morning?
So, firstly, good morning to everyone and a very warm welcome to you on Business Today. It's the weekly expiry of the Nifty. Therefore, you're going to see flat to sideways trend. Remember, over the last 3 trading sessions, which is Thursday, Friday and Monday, the Nifty has held on to 26,000, retested 21 EMA, and across the board, there is strength, whether it's private sector banks, whether it's metal, in particular IT. Look at Wipro, Infosys, TCS, Tech Mahindra. The top 5 are moving in top shape, and more importantly, it's the rupee that is now creating this issue, plus the weekly expiry that is today. So for the last 3 sessions that you've added somewhere like 240, 250 points, you'll probably shave off maybe 100 or so, retest 21 EMA, and then most probably close above 26,000 today as well. That's the structure according to me, Aabha.
Okay, we've got Arpit Beriwal joining us as well. Arpit, good morning. Let's take a look at the index first, expiry as well. What are you tracking?
Wow. So if we see overall, if we talk about the headline indices first, Nifty. So Nifty has been trading in a broader range. So the weekly setup from last 2 weeks, it is forming lower structure, which clearly indicates that upside is capped. But at the same time, on the daily scale, Nifty is holding about this 50 DEMA. So clearly, Nifty has got stuck in a range between 25,750 to 26,200. That's a broader range. Today being the expiry, and looking at the option data, 26,100 is the maximum call OI concentration, which is likely to act as a stiff hurdle. At the same time, 25,850, 25,900 is the put concentration is intact. So looking at the overall band, our sense is that 25,850 to 26,050 would be the range for the expiry today. Looking at the overall setup wise, the view is still mixed on Nifty as it's trading within the range between 25,850 to 26,050. On the immediate basis, 25,900 would be a support zone that we have to keenly watch onto that. If it holds that, then we will play with a positive bias. Now talking about Bank Nifty, so Bank Nifty, we have seen a different picture over here, where we see on the daily scale it has got stuck in a very tight range of 1,000 points between 58,800 to 59,750 levels. But the good part is that it's relatively outperforming. Today we have seen some subdued movement at the opening tick, but overall look at the picture on the daily and the weekly time frame. Bank Nifty is holding over its 20 DEMA, and 59,000 is likely to act as a key support. Our sense that till it holds above 59,000 spot levels would be overall buy on dip stance, but at the same time 59,555, 55, 59 is the hurdle levels. So in Bank Nifty also we need to play this range for the coming week.
Just want to point out Meesho. Meesho's up 6% today. And remember, it's only a recent listing. So 6% higher on a Meesho. Just trying to pull up any kind of trigger for it. But I can't see something immediately on my screen right now. But quite a sharp move this morning. 7% Arpit on a Meesho.
So definitely it's a new listed stock, and if you just see the chart history of last couple of days, it has given a range breakout above 177 levels. Good surge in with good surge in volumes. So definitely I think look at the chart history is very small. So if you see the level wise, 173, 174 would be the major support level. That is the previous hurdle level last 2 days back. So setup wise, closing above 174, 175 would trigger more momentum towards 188, 190 level. So 175 would be the major support levels. On the upside, 190, 192 move can be seen due to huge surge in volumes and a range breakout of the daily scale.
Market analyst Mr. Arun Kejriwal joins us, a gentleman who spent now close to 4 decades in the market. Namaste Arunji, a very warm welcome. You see the weakening rupee to a fresh record low on a regular basis. How do you think that is destroying sentiment on Dalal Street? What's the prognosis?
So, good morning to you, Shell. I believe everything that's currently happening in the market is a bouquet of wrong things from a market perspective. We keep on hearing about the trade deal, and it is as elusive as Scarlet Pimpernel. I don't know whether Donald Trump is playing games with India or he's not keen on doing this trade deal, but it's a never-ending round the corner sort of an event that's happening. The rupee is weakening for various reasons all over again, and the trade deal is also part of it. But if you see from the market perspective, we seem to be fairly holding on to our own levels. It's a tight range, roughly 500 points on the Nifty, in which we have spent close to 4 weeks. Rupee is likely to remain under pressure. I am not a rupee expert or a currency expert, but still trying to give my 2 bits for whatever it is worth. We need some positive news which could then impact the rupee on the positive side.
Okay, I mean, let's pull up some of those IT stocks, but I don't think anything much is moving today. We're pretty much seeing declines all around. I think that huge overhang, Arun, of the trade deal is still very much there. And we're not seeing any kind of uptick across the board on the currency depreciation either. And we've been talking about this, how the markets have just been very sluggish the last couple of weeks. And the only main trigger left is really that trade deal going through. So like you said, you don't know, whether Trump is just playing a game right now. But this is clearly the biggest overhang on the markets. How do you suggest one maneuvers their investments at a time when their strategy at a time when things continue to be so uncertain?
So on a very lighter note, Aabha, I believe we have got less than 2 weeks before the year comes to an end.
Yes.
I think it's time to sort of shut shop for the year.
Okay.
Close your fresh positions to be taken for the year. Look at your portfolio, rebalance it, find new stock ideas, and come back fresh in the new calendar year. Having said that, I would also like to point out, while the index presents a range-bound picture, the damage that is happening is in the mid-cap and small-cap space. That seems to be to have caught fever and very high fever. It just seems to be falling day after day, and people are realizing that their wealth, their portfolio levels are just dropping. I believe pain exists there, and it's very rarely that you see this kind of a disconnect between the large cap and the small cap, mid cap. I believe this is serious cause for concern, And that is why there is no enthusiasm in the market, particularly from the retail space, who have all their eggs in the small cap, mid cap segment.
Well, two stocks doing pretty well in the markets, Britannia and Marico. So fresh bullish crossovers happening in the FMCG space. Remember, the market is defensive, and the depreciation of the rupee or its record low has little or no impact on the FMCG space. IT bleeding 1% lower, 38,063. Ideally, a weak rupee should have helped Infosys, HCL Tech, TCS, Wipro, and Tech Mahindra in particular. These are stocks that have strong charts, so the dips need to be looked into. Coming to you, Arunji, a view on Hind Copper, a view on Vedant. The metals rally seems unstoppable, and now commodity, metals, copper, aluminium, stocks doing wonderfully well. What would be your top pick in the metals space?
It's a very interesting question that you have raised. Earlier it was gold, silver. Now it seems to have moved to copper, aluminium. Two things are happening here. The demand for transformers, which has sort of beaten all possible records. All companies in this business have gone crazy with the order flow that they have, require large amounts of copper and also aluminium. So the simple demand for copper and aluminium to be used in various industrial products is skyrocketing, which is taking these shares into limelight. Steel is still a laggard if one were to talk of the broader metal space, but I believe sooner or later it will catch up, because if you're talking of capital goods which require aluminium, copper, to some extent you also need steel, if nothing else, to house the products in which copper and aluminium is used. So if you talk of large conglomerates which are there in this, I believe the top pick would definitely be a Hindalco, followed by a Vedant, irrespective of the fact that Anil Agarwal has all his problems of debt, restructuring, etc., which he keeps on coming up with. Hindustan Copper, while it's a focus PSU, sorry about that, he simply doesn't have that size and scale which one is looking for when you're talking of giant companies like Hindalco and Vedanta.
All right, a whole host of stocks that are buzzing. Let's take you through those. Fertilizers, that's one segment that's seeing some action. The finance minister saying a bumper buffer of fertilizer stocks by steady imports. So that's the news coming in there. Pull up FACT, that's up about 5% right now. So that's on fertilizer stocks. Ion Exchange is seeing huge volumes, that's up 7%. The company said its one contract's worth around 205 crores from Raison Energy and Inox Solar for an ultra pure water and wastewater treatment system for solar projects. 8% now on an Ion Exchange. Shakti Pump is up about 4%. That's a third straight session. And let's get Arpit's view on this. 37% up in a week. A work order from MP, the Urja Vikas Nigam Limited, for a 2033 standalone off-grid DC solar photovoltaic water pumping system. That's for the entire state, and it's valued at about 71 crores. So multiple orders, and both order book and revenue potential getting better there. Shakti Pumps, Arpit, let me get a view from you on this one.
If you see overall the chart structure of Shakti Pump, definitely the stock was in downtrend from last couple of months. But this couple of days has seen a very sharp up move from the lower levels. If you see the chart structure from almost 550, 570 levels, you're seeing sharp uptake from the lower levels towards 780 levels. So then look at the chart setup wise, definitely a monthly setup, hammer kind of pattern is being formed, which clearly indicates the positive bias for the for Shakti Bump. Immediate basis 800 and 820 is the key level to watch out for. That was the previous hurdle zone where the stock gave breakdown. So I think if someone has taken position, one can book profits near around 800 and 820 levels, and above 820 levels, the someone can revisit it for further upside move. So 800 and 820 would be a key level to watch out for. Closing above that will trigger fresh movement towards 850, 880 zones.
Let's get Arunji in the conversation as far as the IPO space is concerned. Very, very good quality IPOs coming into the market. Of course, Pro ICICI, ICICI Pro AMC is actually an offer for sale. Arunji, on view for this one, and in the 200 or so IPO listings that you track, anyone that's emerged in the value zone?
So on ICICI Pro, I believe it's simply a no-brainer. It's a company. It's an IPO from a company which is doing extremely well. It has the second largest AUM in the country. It is coming at valuations which are attractive compared to the largest AMC, which is in the listed space as of today. I'm talking of HDFC, which is there. I like what the management told me about the uniqueness of this business. This is probably one of the only businesses that you have where you get paid for managing somebody else's money. Therefore, you are asset light, you don't need any capital to do the business, and you get your commissions on a daily basis prior to you declaring your NAV for the day. I believe investors must apply for it, and even on listing, because allotment will be disappointing looking at the response that this company would get. This would be an attractive buy, even if one factors in the premium that we are hearing about this company. Moving on to your second question, and I know you well enough, having spoken to you for well over 30 years, that you typically come up with difficult questions. It's been a tough year where we've already seen 100 listings in this calendar year on the main boards. Offhand, I do not know whether I would like to say that this was an outstanding company that came during the year, and I would recommend investors go out and come. But if I were to sum up 2025, it's been a year where promoters, PE investors have taken the moolah. They have sold out big time, and investors have raked in money. There have been mega listings, stupendous value creation that has happened. A case in point would be LG Electronic, which against 1100 odd opened at 1700. Post that stellar listing, it's been hovering 1600 plus or thereabouts, nothing much happening. Many other listings have either done extremely well but then hovering. Not one share that I can think of today where even after listing stellar performance, company has continued to rise. The new age companies have been mixed bags. Issues were raised about the way promoters, the founders raised their holding, etc. So it's been a tough year. Probably the year end would give some clarity on where and how we could look for the coming year to make money from the recently listed IPOs.
All right. Let's take a look at some more buzzers then. We've got, let's take a look. a few names that insurance, in fact, I want to bring up. Firstly, Bernstein on the insurance sector has said that cheaper insurance via deferred commissions will bring near-term pain but long-term gains, and they prefer Indian life insurers for modest growth and attractive valuations. We've got insurance counters also in the news today because of the insurance amendment bill. So keep an eye on that, and we might see some action there. Arpit, anything from that basket that you're tracking or that looks particularly attractive to you on the charts? And then I'll get Arun's view too on some of the insurance names.
Overall, the financial pack has been relatively outperforming. Among that, if we talk about the overall the insurance space, relatively it has been in a sideways to consolidation bias. But looking at the overall market breadth, relatively they are still outperformers. So if you look at the chart structure of HDFC Life on the weekly setup, it has got stuck in a range between 740 to 780 levels. But the good part is that it is holding near its life height IATs, just couple of percentage away from its life height IATs. So look at the chart setup wise. On the monthly setup, closing of 780 definitely can see a good move towards 800, 820 levels. So I think HDFC like looks good within this space from here on, as it's near its support zone, and slowly steady the stock can head towards 800, 820 plus levels.
9:36, ladies and gentlemen, a detour into the market. The Nifty is now retesting 25,905. That's mainly because of the dismal performance of the rupee. Fresh low again, another record low for the currency, and that's impacting sentiment on Dalal Street. Nifty Bank down 330 points, 0.5% lower. IT index taking it on the chin, 1% down as far as the index itself is concerned. And of course, when you look at volume buzzers, you see pain on Intellect Design. This is a mid-cap IT company falling on fairly strong volumes, 100% of 5-day volume, which is about 2 lakh shares already traded in the first 15-16 minutes of trade. But there are winners. Look at the fertilizer space, something that Aabha has already marked, but look at Bharti Hexa from the telecom space, 2.75% higher, 1747 for you. Natco Pharma up about 2%. Praj Industries doing pretty well in the trade, and of course record highs on Vedant, something that Arunji has already mentioned. Now the high limit was 552, my apologies, a bit of profit booking from there. And of course Ashok Leyland, strength coming back in this one. 168.10 for you. This is how the markets are at this point of time. Most active counter is at this point of time Eternal, 3.4% lower, 288. Indigo down a percent, 4960. Arunji, would you want to step into Indigo? Is the worst behind the airline, or is the best behind the stock?
Oh, you put me between the devil and the deep sea, and trying to figure where I am is going to be difficult. But let's look at it objectively. The airline has got its act together all over again, and they are operating their flights and you could say it's business as usual. But let's understand, they have rubbed the entire administration on the wrong side. The way they handled the situation in those 5 to 7 days at the airport, they reacted too late. They took things for granted. And somebody who's in the service industry, like an airline, can't be doing this thing. The ramification of this is going to take much, much longer. We will also see penalties of various kinds coming in, and one small incident that comes in the future will get magnified many times over. If I was a short-term trader and I thought that I could sort of do a punt on Indigo, doesn't look advisable, simply because this quarter numbers are not going to be encouraging. So what are you looking at? Technically speaking, because of the fall, you would say that there could be some sort of a correction. but with results imminent in say about 4 weeks' time, it won't probably be the best medium-term bet from my perspective. On a longer term, post this incident, until Indigo does course correction and intimates to people the visibility of that course correction, it's a no-no for a medium-term investment.
Okay, that's on Indigo for you. Let me just pull up some of the other active counters right now. Reliance Infrastructure, that one's up 5% today. Let's pull that one up for you. So we've got some moves coming in there. We've seen a lot of expansion coming in with regards to some of the hotel counters. Lemon Tree's in the news almost every other day. IHCL has continued to go from strength to strength, lots of new acquisitions. Of acquisitions of properties, of course. So, and of course, we've got, a whole host of, these names doing well, and also expectations of perhaps an infrastructure status when it comes to the budget. From the hotel stocks, Arpit, let me first ask you, anything attractive that you find there on the charts?
If you see overall from the hotel space, so one pick would from the F&O space and one from the non-F&O space. So first, if you look at the charts on Lemon Tree, particularly on the monthly scale, the stock had retested its previous breakouts around 150, 155 levels. Post that on the weekly scale, it has been sideways. But the good part is that where the mid cap and the small cap sign corrective phase, the stock is still comfortably trading just a couple of percentage high, low from its all-time high. So look at the setup wise, definitely a good base is formed near 150 to 154 levels. And I think slowly, steadily, the stock can head towards 170, 175 plus positionally. Along with that, if you look at these charts of Indian hotels, so Indian hotels also have gone on to a very sideways range. But the good part is that major support is seen around 700 levels, and the stock is not breaching that level. So again and again, the stock is bouncing from that level. On the upside, 750 would be the level to watch out for. Once the stock closes about 750, 752 levels, the stock can head towards 800, 820 plus levels. So Indian hotels and Lemon Tree would be a preferred pick within the hotel space going forward for next couple of months' time.
Okay, that's on Indian hotels coming in for you. We had some of the home finance companies also, or all kinds of, financial companies, whether it be, Shriram Finance, whether it be a whole host of the others that had actually started to see movement yesterday. I know you already said I don't shut shop for the year, but when it comes to the financials, do you think there's maybe still some room on some of these mid-tier financials, on the back of demand when it comes to housing, for instance, that we might see fire away in the new year?
Certainly, Aabha, it's not that you're not going to look at anything. That comment that I made was more of a general comment. I believe amongst the pack of financials that you are looking at, one company that stands out in my view is a Ujjivan Small Finance Bank. It is trying to get its license for becoming a universal bank. It has been slowly and steadily reducing the unsecured book, which includes the microfinance business, and broad basing its risk profile, which makes it acceptable to becoming a universal bank, which stands out. Its performance has been excellent, and the way they managed the crisis, which began 1.5 years ago in the microfinance, speaks well for themselves. The share has been consolidating, no great jumps, but moving from that 40 odd level to now 52, 53 over probably 12 months. It's a stock which could go a long way, but looking at the price, one should not expect that the stock gives you 5-7% movement in a month's time. It's a slow and steady. Along with that, there are quite a few NBFCs which deserve mention and credit and need to be looked at. One is, I'm forgetting the name, and that name just seems to be slipping me. But there are some of these stocks which are not very large NBFCs, but are having niche which can be looked at.
All right. Now, the State Bank of India may consider listing a third subsidiary in the coming months. India's largest bank, which already has SBI Cards and SBI Life listed on the bourses, may soon monetize its digital interface, the YONO. The bank is planning an ambitious path for the app, targeting massive cost reductions along with more insurance, loans and wealth business. Listen in.
Digital transformation will be anchored on what we have done on the YONO platform. What I call YONOization of the bank. I think it's not about just simply introducing YONO. The whole simplification journey is something what we will be looking at. The monetization part, I think, is not on the table right away, but we do feel that a lot of elements which we brought into new YONO, not only in terms of the customer user interface, even on the technology, or the fintechs whom we have used, have a reasonable components. And if they're useful to the industry, we will definitely be looking at bringing them and making it available to them.
And some breaking news coming in. Elon Musk's wealth has soared by an unimaginable $167 billion last night. That's more than the total wealth of the 8th richest man in the world, taking his total wealth past $600 billion. The massive surge comes on the back of a new valuation for SpaceX. An insider share sale last night valued Starbase, the rocket maker, at $800 billion, making it the world's most valuable private company. Musk holds 42% stake in the company, making it worth $317 billion. The number 2 in the billionaires index is Google co-founder Larry Page, with a net worth of $265 billion, $373 billion behind Musk. That's where we leave it on the show today. Thanks for watching.
The biggest anti-national act you can do